Forex Focus brought to you by IG. Wanted to go through, as we enter July, some of the, first of all, what Forex carry is, and then also what might be deemed as some of the top carry trades if you were looking for positive carry in your Forex trades. First, let's talk about what the heck carry is even. It's actually pretty simple, and it's one of the most prominent strategies in Forex trading. Forex, you'll remember, is pairing two currencies together to create a trade. And so instead of being long Apple stock, which is, if you're buying it here in the US, priced in US dollars, you can buy euro currency priced in US dollars, and you'd essentially be getting long that exchange rate. And so if you buy euro USD at 110, that is the exchange rate for every euro is $1.10. And you think that that exchange rate is going to go higher, that the euro is going to appreciate relative to the US dollar. Now, along with that concept here in Forex, interest rates actually play a very important role, whereby every pair that you trade, you have a long currency and a short currency, and thus a long interest rate and a short interest rate. And if you long the higher interest rate and short the lower interest rate, you can create what's called positive carry, where every night, overnight, you would get the difference of the interest rates over 365 days. And some days when it's adjusting for weekends, you'll get 3 days worth of it. And multiply that by the notional value of the trade, which in Forex, obviously, given the lower margin rates than stock trading and some other markets, can be levered up, so to speak. So larger amounts, which of course come with larger risks. So you have to keep that in mind. And we'll talk about the price risk here in a second. And this is adjusted for a small admin fee overnight. But the concept here is you can create daily interest, almost like a dividend stock that has a daily dividend that it pays out if you're on the positive side. If you're on the negative side and you're long a currency that has a smaller interest rate and you're short the currency that has a larger interest rate, then you would be paying that negative carry overnight. Now, here is the current landscape for interest rates from the US to the UK, all the way to Switzerland and Japan on the lower side. And you can see how you might want to pair these things up if you're trying to create positive carry. And of course, if you're not even trying to carry trade, you'd want to be aware of these if you've got positions on in Japanese yen versus Australian dollar, and you're long the yen, short the Aussie, you would want to know that, hey, by the way, I've got this negative carry that's working against me every night. But yeah, US, Great Britain, and Canada have some of the highest interest rates right now. Japan, Switzerland, and Sweden have some of the lower ones. And part of the weakness that we've been seeing in Japanese yen has been from the fact that they've had such low interest rates, and there's been such high demand, so to speak, to get short that low interest rate and get long currencies that of Australia, or like the Eurozone or UK or US, that create positive carry against that Japanese yen. So here again, positive carry traders try to buy that higher rate, that in this example, 4%, and sell that lower rate that in this example is 0%. And all else equal would create an overnight profit similar to stocks and dividend. But there is a large risk. There's something else going on similar to that stock. And of course, IG doesn't provide stock trades. It's just used as an example here. But if I buy a high dividend paying stock, and the stock pays 5% annually, but falls 20%, I'm out some money. And so similar concept here, that yes, all else equal, I can create positive carry by being long US dollar and short the Japanese yen. But if that US dollar falls compared to the Japanese yen by more than my carry amount, I'm losing money. And that's a very real risk, especially when you look at the fact that you would be buying this USD versus the yen at what are, 20 to 30 year highs here, a lot of room to potentially fall to the downside. But like I say, there's a synergy between all of this upside price action here and people demanding that higher interest rate from the U.S. At the expense of what is still crazy to me, to a lot of people, I think, the negative interest rate in Japan. And so you got to keep that in mind, especially when looking at, like I say, this market that's at huge price extremes, has covered so much ground, and say you're getting, 2 or 3 pips worth of positive carry in a given night by, in this example being long, this forex pair has the potential, given the last year or so of action, to fall, thousands of pips over the course of a couple of weeks or months. So very real risk here next to that carry trade in the price action. But you can also, if you're looking to, test the strategy out, or you're looking for that all else equal to potentially be as, low volatility as possible, you can look for lower volatility pairs. And that's going to usually come in the way of highly correlated markets like the euro compared to the Swiss franc, both European regions there, and tend to be very highly correlated. And you look at the price action for the last year or so here, and this is a market that has moved from about 97 cents to $1 and a penny. So about 400 pips high to low, that's a lot of movement. And like I say, if you're bringing in a pip or two per night in positive carry, and it moves down 400 pips, that's going to, produce some losses there. But compared to, the pound dollar, which in the last year of trading has moved, 2,500 pips, this is historically been a lower volatility alternative. Or you can try to look for relative value, essentially not look for positive carry potential, and a market that's not, you're not buying it at its highs or selling it at its lows. So a couple of things to think about here when you're carry trading. Obviously, price action risk is quite large, and that positive carry can dissipate if the lower interest rate region hikes interest rates higher. But some interesting markets to look at here in July, given that US, Eurozone, and UK have higher interest rates right now, Japan and Switzerland on the lower side. Some different things to mix and match if you're looking for carry trades here in Forex.